WTI futures hit 10.5-month highs yesterday and spent the overnight session pretty sturdy fashion. However, dropped in the early going and we did open lower. Some of that might be because of the strong dollar. Others are pointing to World Bank Chief Economist Reinhart coming out with the potential consequences of a protracted pandemic. Perhaps profit taking is part of it. On the other hand, Eurozone industrial production came out and really did beat expectations. So since then, futures did open lower, but they have since bounced back and now trading a little bit around the flat line. Volumes have tailed off a bit. Part of that is due to EI inventories beat expectations at a 9-month low. However, we do need to keep in mind that inventories are still 8.9% above the 5-year average. Perhaps throwing a cold, wet blanket over that is gasoline inventories right now 4-month high, and distillate inventories were higher by 2 times over consensus expectations. US CPI was solid, at least on the headline basis, and so the market is continuing to sift through that. Next would be really carryover support, medium-term trends in the market, and one of them is definitely compliance. Petro Logistics just reported yesterday that OPEC compliance rate was down 10% from December. Non-OPEC was down 8% compliance from December. Russia's output up 1.5% the first 10 days of January compared to first 2 weeks of December. Storage is another issue. Vortexa just reported yesterday that 7-day floating storage is up 51% on a year-on-year basis. And so traders are watching that. Also, traders continue to look at risk assets, the stock market, US dollar, treasury yields, and last but not least, of course, the trajectory and perhaps next steps with regards to the pandemic.